to Cipla, and I'm going to quickly take it across to Srishti as well, my colleague, and analyze the numbers in greater detail. Srishti?
Well, yes, a great set coming in from Cipla, and that's why we are seeing no stopping for the stock of Cipla, because on all the parameters, the company has delivered a better performance versus the street estimates. And look at the margins. We were expecting the margins to be around 23%. The company has delivered 23.6% on that particular front. Even on the profit figure, that has seen a jump to 998 crores versus the street estimates of 850 to 860 odd crores. So on all the parameters, we are seeing a good numbers versus the street estimates. And not just that, when it comes to the performance of the US as well as India business, there too we are seeing a good jump, because do remember that Q1 is a seasonally strong quarter for Cipla, but this time it was a muted expectation from the US business growth, but sequentially we have seen a good jump on that particular front, surpassed that $200 million mark, and 222 million is what the company has reported for their North America business. India too, the expectation was 2600 odd crores. The company has delivered 2772 crores in the profit of India business, and the company also highlights that in the North America business they are continuously ramping up, and in a couple of products they have increased the market share as well. They are witnessing a good traction in the base business, resulting from the strong demand signals and tapering of the price erosion. So the commentary on the strong demand as well as tapering of the price erosion is something which is taken very positively for Cipla, and that's why we are seeing the stock having a good run up as of now.
Cipla was a big beat coming in. Let's listen into what the management has to say.
We've had lots of commentary on FDA inspections, the high compliance costs, and warning letter closeouts are taking longer these days, and market pressures remain. How are companies like Cipla actually safeguarding the ROI in markets like the US? Is this something that you are calibrating at this stage?
What we can control is to de-risk our assets. What we can control is to make sure that our facilities operate with the right remediation and the right corrective and preventive actions. And we can't control price erosion. The only thing to control price erosion is your execution of new innovation and limited competition opportunities. So we're doing a mix of all these. We've got a portfolio which is fairly distinct, and we'd like to believe that despite our current challenges of facilities, our portfolio has a lot of steam that is left to be unlocked. We are working on remediating the facilities, but at the same time, we're also creating a de-risking of the asset base by linking each asset, hopefully linking a large number of the material assets to two sites. So that's all we can control. I unfortunately, in as much as we try, the general rigor, the general nature of the inspection or the environment, that's something that's not in our control.